Two-year notes fell for a second day as the securities drew a higher than forecast yield at yesterday's $42 billion sale, spurring concern that the $115 billion of notes slated for auction this week will overwhelm demand. Here you see the two-year down 1/16, actually now 3 ticks with the yield up to 1.08%. Take a look at the 10-year. You see the 10-year yield coming down to 3.68%, and finally, just to round it out, let's take a look at the long bond there, 4.56%. All right, now let's go to Brian Luke. Treasury's reacting, as I said, to the two-year auction there. For more insight, he's going to give it to us. What do you got, Brian?
Yeah, man, there's a record amount of issuance, we said, and we always talk about how when you have a record amount of issuance, why is there always a record amount of demand? This time is not the same as the last time. So let's look at the details, and I'll kind of walk you through the highlights of this record bond auction. It's $42 billion. The bid cover ratio, which judges demand, Matt, that was a 2.75. That's lower than the previous 2 months bid to cover ratio. So it's backing off. And where did it back off? From the indirect bidders. In fact, Matt, over 2/3 of the indirect bidders took down last month's auction. This auction, only 1/3. They have their entire position in terms of who bought the actual auction, and they're the most competitive, and that's what caused a little bit of a spike up in the two-year rate. In fact, the 30-year bond, even though it's lower today on the day, it sold off about a point immediately following the fact that foreign investors aren't buying the short-end paper as much today.
All right, when we talk about, and we talk about this a lot, record supply as far as debt and the U.S. government requiring more and more and more money. We hear about it, obviously, a lot from viewers as well. How dire is the situation?
Well, I mean, it's a big problem, and it could be a big problem in the future. But when you look at it in perspective, I want to show you like the 20 years of time in terms of how much borrowing and how much increasing this is. You see that huge spike up in two-year issuance. That's $42 billion. But then when you look at the cost of borrowing, Matt, that's come down dramatically. In fact, like you said, like we talked about today, they borrowed money for 2 years at 1.08%. I mean, you look at 20 years ago, it was at 9%. So this cost of borrowing is actually getting a lot smaller. That's a bit of a good news. The future is a little bit different, though.
All right. Thanks very much, Brian.